Can the Federal Reserve actually go bankrupt? Well, according to Kirian Deso Van Hest, that's actually entirely possible. This is part two of my interview with Kirian. In part one, we talked about how mortgage backed securities were actually in worse shape than they were at the height of the global financial crisis, and that the only way the Fed avoided a debt crisis was by buying up all of that worthless debt. I've got links down in the description to the other parts of this interview series, and I've also got links to Kirian's work on his Substack, his website, his Twitch stream, and even the books he's written. And without further ado, here is Kirian Deso Van Hest. So we were about to have this raging inferno of a wildfire of all this bad debt, right? The junk credit that had built up after decades of low interest rates caused following the global financial crisis. Interest rates were held low for years. So it was free money for everybody. And COVID hits and reality sets in, and all this debt is about to go bad, and the Fed steps in and saves it. Well, all that debt is still out there, right?
Oh, it's on the Fed's balance sheet.
So the Fed owns it.
Yeah.
And so is the Fed. You said they're not selling it. So
Of course not.
if this debt is going bad because rates are going higher now and it's getting harder to borrow and we're in an economic downturn, so is the Fed just going to eat the loss if this credit implodes?
Some central banks in the world have already posted losses because their balance sheets, the bonds on it, have become worth less than when they bought it or bought them. So what's going to happen? I actually have a new article out today on my Substack, which we'll link at the end of the video, which goes over this. The value of the gold that the Federal Reserve is supposed to hold, the 8,000 tons, converted currently at current prices, is about 500 billion. They have 2.7 trillion worth of these mortgage-backed securities on their balance sheet. If they start going bad to more of a tune than the total forex reserves, the gold reserves, and the non-counterparty risks assets on the Federal Reserve's balance sheet, the Fed might go bankrupt. I'm not even sure if it's possible for a central bank to go bankrupt, but the Federal Reserve isn't federal. It's a private bank. Private banks can go bankrupt. It'd be unprecedented. But what you might not know is that the Federal Reserve remits a lot of its yearly profits to the Treasury. So it makes profits on the bonds. You know, the interest rate is profit for everyone, including the Fed. But since the Fed has no balance sheet or no need for one, and it only returns a set fixed amount of dividends to its shareholders, all the extra cash, the profits, gets remitted to the Treasury. That process, if these bonds go bad, might reverse. The US taxpayer might have to bail out the Fed for once.
So the Fed going bankrupt, this is, sorry, you're kind of blowing my mind here. They can make their own money out of thin air. How does an organization like that go bankrupt?
They can't. I mean, they can't make money out of thin air. They can make money, but it's subject to rules. We live in a debt-based system, a debt-based fiat system. Well, that doesn't mean that the US dollar is fiat currency. That's a common-made mistake because, well, some people like to say it over and over, you know, that there's a difference between currency and money. And there is, but you have to actually apply that knowledge. What is the US dollar based on? And it's not completely based on faith. It's based on basically the debt of the US government. And debt isn't based on faith, it's based on mechanics. If you have an income of 40,000 a year and you borrow $100 of me, is that $100 going to come back? Well, very likely it will be, because you've got plenty of money to pay it back as far as your income goes. So does that require any faith from me that the money is going to come back? Well, no. No, I can basically calculate, well, your income should be more than enough to pay back the loan over this period of time. So that was going to require this much interest. And there's a AAA rated chance, an actual AAA rated chance that it's going to come back. Now, if I borrow you with the same income, 400,000, that's a different story. Then I'm going to require a lot of faith. Then it's going to come back. Now, with the giant pile of debt that's out there, meaning there's a national debt of 30 trillion that has to be paid for with people who have a personal debt of 22 trillion. The whole system, including the corporations where they get their wages from, is indebted to the tune of 90 trillion. And once that is paid off, maybe those people will find a way to repay the 169 trillion of unfunded liabilities. That's not even promised to be paid for. That is that you'll just figure out later. So the whole thing about debt is that it has to be paid back. If a loan doesn't have to be paid back, it's not a loan, it's a gift. We have different words for these things, different definitions. A loan has to be paid back. With this amount of debt on the shoulders of too few taxpayers, there's nothing the US can do to pay it back. Absolutely nothing. If you raise taxes, people's income will drop so much that you have to print money to compensate them for it, which is going to raise the debt, which is going to exacerbate the problem. So even if you tax all the rich, all the companies for entire net worths, it's not going to work, mate. It's just not going to work. It's too much. So that makes the debt worthless. And then it no longer performs its function. In my article, I write, it doesn't work as much as homeopathy doesn't work. If you dilute anything enough, it stops working like it used to. Same works with debt. Now, because we know it's not going to come back, that doesn't mean the end like that. The strange thing is that US Treasuries still serve their function as long as the money is going to come back. And the money will come back as long as other people are still willing to roll over the US's debt. So that basically makes the US debt the same as a crypto token. As long as it's going up, it's fine. But now, after the pandemic, when we added, the US added to the debt to an extraordinary amount, while at the same time shutting supply down, so overstretched supply chains immediately became beyond overstretched. And I've written about supply chains too in my Substack. Well, that just forced the issue. That forced prices to go up, which forced people to demand more wages, which forced prices to go up because companies had to compensate for their earnings. Companies at the same time are not price gouging. They can't. Inventory buffers everywhere have been depleted because we shut down production and gave people a bunch of money.
Yeah, we didn't just flood the system with money. We also denied the system inventory. So we created this inflation at both ends, both supply and demand. You know, we didn't just increase demand by dropping the helicopter money. We restricted supply at the same time.
By my calculations, we could have survived one lockdown unscathed because we always have supply buffers for these kind of events, even in a just-in-time system. And that is why in 2020, you didn't see any inflation. That's also why everybody else missed it, but not me, because I kept warning about this. When the supply buffers of the producers are drained because everybody keeps buying the products, they're just going to produce more. That's normally economics. That's what's supposed to happen. But if the raw resource producers are also shut down, their inventories get drained. And if those are gone, then the next load just has to come out of the ground whenever. You can't dig them out faster. How do you determine who gets the stuff when there's too little of the stuff? Well, you go to auction. You simply have people bid, and as long as there's capital to bid on it, well, the highest bidder wins. It's been like this forever. So the highest bidding producer also has to pay the most, which raises their prices, and they can compensate for that for a little bit by compressing margins. That's why in March of last year, inflation slowly ran up, but it did run up because basically margins could no longer be compressed and people started raising prices. But when this starts affecting the whole system, because prices do go up and up and up, and people have more and more trouble paying them, you inevitably end up where we are now, an inflationary recession, because the necessities and the discretionaries go up at the same time. At some point, when the easy money isn't so easy anymore, the discretionary stuff starts falling because the necessary stuff starts rising or continues to rise. And that is what's driving inflation. And that cannot be stopped by raising rates.
And that is like word for word what we saw in the earnings reports from Walmart, from Target, what we're going to start seeing from Apple. People are spending so much to eat, to fill their gas tank, and on their rent. There's nothing left for anything else.
And Jerome Powell, he's making a policy error by raising rates. But the problem is, the real problem is, what I've also been saying for more than a year, is that he's caught between a rock and a hard place with his back against an unmovable object and an unstoppable force coming his way. There are no good options. There is no way out. This is why I've been warning people to buy gold and silver. This is why I supported the silver squeeze straight from the beginning. And on Twitter, I promoted it a lot. On your channel when I found it. I mean, it said, Jack, come on, man, you should have told me. And I retweeted it because it's important that people buy silver and gold, not to get rich, but to protect themselves from all of this happening, because there is no way out. If Jerome Powell raises rates, yes, eventually you're going to get demand destruction. It means people starve. That cannot be allowed to happen politically. Hence, that we've already seen a bill introduced to introduce price caps on gasoline and diesel and oil, because that's been going up and the politicians don't know what to do about it. The people are going to get riotous very quickly, so they're just going to limit the prices.
And unfortunately, when Keynesian economists ruins the world, the Keynesian response is always to get more Keynesian. Price controls, sure, because that always works. It works so well in Venezuela, a whole nation of dumpster divers, because they nationalized everything and they started saying you can only charge this much. And well, look, prices don't rise, the shortages don't go away, do they?
As much as I like to shit on Keynesians, the Austrians aren't much better here. The simple fact of the matter, well, they're saying like, we'll go back to the gold standard and that'll fix everything. No, it won't, because we just simply fucked up for too long. You can't fix 50 years of economic mismanagement in a year or even in a decade. It's just not possible. There are no good options. If we go back to a gold standard, for instance, well, if you just take the 8,000 tons of gold that the Federal Reserve has, or supposed to have, and you divide that by the M2, you get a gold price of 85,000 per ounce. It would go up 45 times from here. So everybody who doesn't own gold goes down 45 times from here. That's 97 point something percent.
Well, there you have it, folks. It's actually conceivable that the Federal Reserve could go bankrupt because they are the proud owners of trillions of dollars worth of worthless debt that might not get paid back. And it's not just as simple as them printing more money, because dollars essentially equal debt. And the world is wising up that U.S. debt is not what it once was, because there is just this unimaginable scope of a debt problem going on in the United States. And that's why Deso and myself are strong advocates of owning physical precious metals, just like Kirian said, not to get rich, but to protect yourself from the inevitable of what is coming. Guys, I just want to remind you, this is only part 2 of my multi-part series with Kirian Deso Van Hest. I've got links in the description down below to the other parts. I've also got links to Kirian's website, his Twitch stream, his books, and also his Substack. I highly recommend all of those. Kirian does fantastic work, and we are just absolutely blessed to have him here with us on this channel. Look for the rest of this interview series in the days to come, and until next time, live small and dream big.